guys, welcome back to the Capital Mindset Show. Today, we're going to be going over a subscriber request. I brought on some interesting questions. So this is going to be part one of two-part series, and that's going to be concerning the four payment giants, Visa, MasterCard, American Express, and Discovery. So looking forward at Visa and MasterCard, which is what we'll be discussing today, we'll be discussing a little bit about the technology, the mode, etc. So Visa and MasterCard, they are the rails of the system, the rails of the financial system. If you look at PayPal and Square, some people think they compete. They don't compete. If you take a PayPal debit card or credit card or a Square debit card or credit card from Cash App, you will see that they use Visa or MasterCard, and it says it on the card itself. So they actually are utilizing the rails of Visa and MasterCard. So they're not actually competitors. In fact, Visa and MasterCard, they are their customers are these banks, right? And then these banks are the issuers of the card, and then you are the user of the card, and then they make a piece of the profit every time you swipe the card because it goes through their network, okay? And then so when you experience those high interest rates on whatever it is that you do, a lot of people like to blame the credit card companies, Visa and MasterCard, when in fact, it's not them at all. Now, American Express and Discovery, that's a different story. But with Visa and MasterCard, in their sense, they are just the system. They don't set the rates or anything like that. Okay. And by proxy, they don't carry the risk, the same risk of default that the banks have. Okay. Now let's take a look over here actually at the price action of both entities. And I'll kind of showcase or talk about their performance and why it's been so stellar. So again, the market has always priced these businesses very highly because of the moat, the perceived moat. And we'll take a look at what that entails when we look at the margins. So MasterCard has actually outperformed Visa by quite a lot, about almost 7 times more since IPO. So very good performer, and Visa has been about there. So Visa is the larger of the two, but MasterCard is the faster growing one. Now let's take a look over here at the annual report, and I'll actually highlight some things. So they are very well capitalized, about 16 billion. And then long-term debt is about 21 billion. These are 2020's numbers, sorry. And what I want to highlight is they have a net debt amount of about 5 billion, which is not too bad. But something like this is actually the most important part because these numbers are kind of outdated. But we do see a 21 billion net revenues, and I'll show you the net income. The net income is 10 billion. Find me a company of this size with margins like that, and this will show you, it will show you if you do that experiment, that this is one of the best businesses in the entire world presently at the moment. Now, MasterCard by proxy is basically the same. So I actually won't really cover that, but in the model, we'll look at both Visa and MasterCard. So that's pretty much all I want to cover for that. And when we go over to the model, I'll actually showcase some things. So first I have pulled up as MasterCard, and we have a price start of 30.90, implying a 26.21% upside. And what I want to actually showcase is take a look at these revenues and these cash flows. So what I want to say about this is since the business actually makes money from each transaction, this actually brings to thought, okay, what happens? How does inflation affect this? Well, it's a little bit more complex than that because not always inflation is good. It's all about dollar volumes or currency volumes. So they make more money if more volume is going through. But however, if we look at consumer spending, if inflation is too high and consumer spending draws down and it makes up more than the inflation amount, then that actually could be negative. So for example, if prices go up too high and consumers can't spend enough to match that inflation, then that's actually going to be a net negative for Visa and MasterCard. However, you could say that they are more protected, and they absolutely are, because if inflation occurs and consumer spending kind of matches that, right, over time, and it's not enough to offset it, so the decline in consumer spending is not enough to offset the inflation, the dollar volumes or the currency volumes therefore increase, and that actually does benefit Visa and MasterCard. So they are a little bit more protected in terms of inflation because they are taking a cut out of every single expense. If you're using a debit or credit card, they're getting money, okay? And in an increasingly more cashless world, they stand to benefit from that, okay? And again, they don't take any of the risk of you not paying back the credit card bill because they don't handle any of that. That's all the bank. The bank is their customer. You are the person using, and you are the bank's customer, okay? So taking a look at the required rate of return, we can see that MasterCard is clearly, according to the model, very overvalued relative to pretty much every metric. We can see the cash flows. We do see that in terms of PE and price to free cash flow, it is trading expensive relative to the market. I think if I look at the two right now, MasterCard is more expensive than Visa, and we'll actually pull that one out too. But again, according to the analysts, it has a target price of 390. And yeah, that's pretty much what I'll say about that. Return on invested capital. we do see a very good return on invested capital. Actually, I'd prefer them to keep all the money, not return it back to shareholders at the present moment, because that ROIC is insane. Okay. Return on equity, return on assets, really good. All right, let's pull up Visa and we'll kind of draw our conclusions there. So Visa, as soon as everything loads in, it's not yet loaded in. Okay, now it's loaded in. So Visa's price target is 219, implying a 15.7% upside, so slightly less upside. And we do see, remember, the growth rate was 12% for MasterCard, but it is 10% for Visa. So again, like I said, MasterCard is that faster growing business. We have a required rate of return about 10%. And if we assume the average growth rate over the past 5 years, this 10%, we are basically at the fair value. So that's interesting, but you have no margin of safety implicit in that price. Okay. But however, I want to say that according to some experts, you might say that the market going into the future will return less because of where valuations are at. Okay, well, I could see Visa outperforming those expectations, right? So Visa is outperforming, let's say the market is projected to grow at 2%. I think Visa could probably outperform that, okay? I wouldn't be surprised, okay, is what I'm trying to say. I want to be very careful with my words there. Taking a look again down at Visa, we do see revenue was also rising up and to the right. Cash flow is the same thing. Analysts actually estimate cash flows to grow more than revenue, okay? So that's probably the increased efficiencies, and then they are cannibalizing the business. But similar to MasterCard, they have a really high return on invested capital. I would prefer, my preference, that they would keep the money and say, okay, how can we reinvest back into the business? However, that's an added nuance. The management team, I trust them that they're actually looking at the numbers and seeing where they can invest. And perhaps if they kept all that cash, that ROIC would actually not be as high, simply because they would actually start wasting and investing in projects that are not as good. Okay. So that's something to kind of think about. But overall, I do like both businesses. They are just trading a little bit more expensive than to my liking. I would prefer to see these companies actually come down quite drastically. Again, we are actually wanting to look at some of these risks, and these are the risks that I'm going to actually be talking about very quickly. So we see that Visa and MasterCard have actually halted operations in Russia due to the whole thing that's going on. And actually, I think this is a long-term mistake for the business. Of course, it looks good, for them in terms of optics, right? Optics are important too. I get that for a business, and then they don't want to be involved with something like that. However, they are actually sowing the seeds. And maybe, you could make the argument they had no choice because government legislation would force them to do so. But even then, that's kind of a policy mistake for the United States, because if I'm a company, right, and I sometimes can't, well, obviously I can't control what my country does, and I have a customer, or I am the customer of a company. If I know that you're going to abandon me as soon as my country does something, what your country disagrees with, then I can't rely on you as a customer. So I'm going to go with the one I can rely on, which in this case is actually China's UnionPay. So China's UnionPay has trying to be making inroads in other countries. Well, now what you're basically allowing them to do is make these inroads in different countries, because you're basically saying that as soon as you kind of go against the United States or what the United States wants, we are going to have to kind of get out. Okay. And maybe again, it's forced on Visa and MasterCard. That could also be the case, by the way. But I'm just saying that this is a risk that you want to pay attention to. You want to watch UnionPay and make sure that they're not coming for the rest of their territory. Okay. Because now that they're going to control more and more market share globally, this does actually strengthen them as a company, and then allows them to kind of come and compete in other markets as well. So also, it gives them a different form of reputation, because, we look at Switzerland. Switzerland was famous for being neutral, that provided a sense of stability, that provided a sense of reputation, that, okay, I'll do business with Switzerland because no matter what happens, they'll focus on the business, and that's about it. Well, if UnionPay kind of becomes that in this sense, then that could be a detriment to Visa and MasterCard globally, because, we do understand that geopolitics is a very complicated matter, and a lot of people like to, espouse their emotions into some things and pick sides and stuff like that. But at the end of the day, the whole ecosystem of the globe is very complicated and intricate, and it's all about relationships and stuff like that. But I also want to point out that there is a risk not actually mentioned here, and that's India. India is actually pushing its own variants of Visa and MasterCard, and it's kind of the same story. So if Visa and MasterCard aren't able to adapt to the growing Indian competition within India, then that could spell trouble going forward. Because again, if you have a really high margin business, you are a target. Let's face it, you are a target. Other people want a piece of the pie. And I do see that happening with Visa and MasterCard going forward. So I want to highlight those risks. If you're considering this business, just consider that risk in your analysis. Different opinions. So again, you might say it's good that they left this country, but I'm trying to turn the coin to the other side and say, yeah, it's good for optics. Is it good for the business? Not so much. And it's actually perhaps dangerous for the business longer term if you allow a competitor to actually rise up from this. Now, it doesn't mean that they will. I want to be very clear by that. It could be that, they just only take over Russia and that's about it. And that's where it stops. And Russia's not a very big economy. I've discussed this in the past. Russia's economy is smaller than that of Italy. Okay, let's be very clear. It is very, very small. United States is the world superpower. Russia at most is a regional power. So Russia is probably, shooting itself in its own foot in terms of what it could be in terms of an economic powerhouse. They have a lot of potential, but it's just, they have the demographics problem and stuff like that. But this is not a macro video, but you get the picture. All right, guys. So if you guys like content like this, go ahead and feel free to leave a like. Watch out for part 2 where I discuss American Express and Discover. And on that note, guys, I'll see you guys in the next one. Have a great day. Bye.